All right, everyone, welcome to my channel, Invest for Tomorrow, and to all my first-time viewers and investors, I hope you guys find this video helpful and informative. And to all my subscribers, welcome back. Here we are with ticker symbol RKT, Rocket Companies Inc. And one thing I've noticed about RKT is that it has been in a recovery after hitting that low down here of about 19 and some change. I've always stated if it broke down below 18 and 40 cents, this could test newer lows, but it's actually been in a recovery. That realtor.com partnership, I believe, is something that has created this catalyst to attract more investors, and Rocket Companies is actually starting to hit newer highs. I mean, it reached recently a high here of about $24.08. I mean, that needs to be broken through for this to see newer highs. But let's go ahead and zoom in here and see what's important for tomorrow, what's our new resistance levels, and what is our new support. So we're going to talk about this narrow and zoomed in, and then we're going to talk about it a little bit broader. So I want us to pay close attention to these new resistance levels and supports, as well as where the 50-day moving average lies. So the 50-day moving average right now is 22.98. Super important number, because as long as we're above it, the bulls are in control. The moment we fall below it, the bears are in control. So I'd write that down. Now, the tug of war has been interesting. It's been back and forth. I mean, hitting highs, hitting lows, and then leveling off, and then obviously the bulls coming back, breaking through it, and getting back into bullish territory. So this tug of war has been very interesting, and for the bulls to have any leverage to stay above this, they need to break through this resistance level. If the bulls aren't able to do that, this could quickly break through the 50-day moving average and end back in bearish territory, and we'll look at the support levels down here. So up here is our highest point of the day at around 23.45. That's an important number, because if that gets crossed and broken through and turned into a support, this could have a breakthrough to hit newer highs and newer resistance levels. So that's important to keep in mind and keep there on the watch. So if you want to write that down, you're more than welcome to. But let's look at the first resistance level and the most important one, which is the closest one to where the price is at right now at 23.09. So the first resistance level that needs to be broken through. This isn't like the bulls can kind of hang out, work their way towards it slowly, kind of get close to it and not use it as a support. That's not possible, because this 50-day moving average will catch up to the price and get it into bearish territory by default. So super important that the bulls break through this, and that is 23.17. The bulls need to break through 23.17, turn that into a support, and start to break through newer levels of resistance, reach newer highs, and pull further away from the 50-day moving average in an upward direction. So it's super important for the bulls, I want to emphasize that, to break through 23.17 so that they can start gaining leverage on this tug of war, continue this momentum, and work their way up to newer highs, having a rally to reach newer resistance levels and move further away from the 50-day moving average in an upward direction. On the other hand, we have our support level. This support level is important as well, but before even waiting till this support level, it depends on how long you're on this chart, or how are you trying to invest in this. Are you swing trading, day trading, or you're on a long-term projection here? But before waiting till there, even if you're long-term, short-term, or day trade, the 50-day moving average is slightly your first support level, because that changes everything on what side of the chart we're in. So the moment this crosses 22.98, I'd pay very close attention to how this stock is reacting. How quickly is it moving to newer lows? Is it actually trying to bounce back and the tug of war is kind of in this area? Or is it plummeting down, hitting newer support levels and reaching newer lows? If it does that fairly quickly and moves further away from the 50-day moving average, then you have the support level here of 22.58. This is an important support level, because if this gets broken through, this is the lowest point here after this slight jump and then slight dip before this recovery, and that lowest point is 22.58. I'd pay very close attention to how the stock is reacting, if it breaks through it, or if the stock is actually hanging out around it. How quickly is it moving up? How quickly is it moving down? Now, if it breaks through 22.58 fairly quickly and it starts to hit newer lows, then the lowest point reached in the day is an important point of reference. I'd write it down, which is 22.27. If 22.27 gets broken through, I mean, the bears definitely have done a phenomenal job doing their part on what they want to do, and that is breaking through the 50-day moving average, make this one tear down, break through the first support level, and then work their way down to the second support level, getting this deeper into bearish territory, moving it further away from the 50-day moving average in a downward direction. So keep those numbers in mind. But before worrying about down here, 22.58 is the first support level and is the level that the bears are going to do everything they can to bring this down and hit newer lows. Again, I want to emphasize, bulls need to break through 23.17 to continue this momentum, continue this rally, and work themselves further away from the 50-day moving average in an upward direction by turning that into a support. And then their next point's up here. But again, before worrying about that, they need to break through 23.17 so they can start to hit newer highs and newer resistance levels. As always, with these cues, I hope you guys are well equipped and prepared for tomorrow to do your own rational decisions as investors. If you feel inclined or encouraged to subscribe, please do so. But don't forget to click on the bell by turning on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watch this video. And at the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.